Hey guys, what's up? I wanted to do a video on WOTM trades, and WOTM stands for way out of the money. They're basically options that have a strike price that's considerably different than the current stock price, and they have an expiration that's pretty close by. So, for example, if you have a stock that is currently about 43 bucks and you have a strike price that's around 50 bucks, and the expiration is for that Friday. Let's say you're on a Tuesday, and the expiration is Friday. You can get those options generally pretty cheaply. Sometimes 1 to 3 cents per contract. So since each contract controls 100 shares, if you can get it for a penny, that's a dollar for to control 100 shares, one contract. If it's 3 cents, it would be $3 to control 100 shares. So basically, for 100 bucks, you can control. Let's just take for an example. Uh, if it's 3 cents a contract, you can control 33 contracts for 100 bucks. So $3 a contract, 33 times that would be $100, and so you're basically controlling 3,300 shares because of the far strike price and the short expiration. And the powerful thing about that is that although it doesn't happen a lot, that you can have one that really kicks in and gives you a major return on them. When they do happen, in fact, if there's some surprise news, whatever it might be the case, uh, sometimes those options can soar in value. We've seen them. I've seen recently where there's 81,000% in just a few days' time, and that was on a buyout. Again, this stuff can come out of the blue. Even insiders aren't allowed to trade on that. I don't quite sure. I'm not quite sure that doesn't happen, but so supposedly it catches a lot of people by surprise. But so the point is that when you can get them very cheap and you get some kind of news situation comes up, even the most common news, which is earnings release, and you have insiders and people who own the stock maybe underestimate the potential for the stock at that particular quarterly earnings release, and the stock gaps up big time. It's not uncommon to get 5,000, 10,000% return on them very quickly. So, and it doesn't offer a high level of predictability. We can't build a service around that. It's a nice bonus, and we post stocks that have that kind of price tension when we see them. But for us to go out and tell you, hey, go buy $1,000 worth of contracts on this, it's just not. You don't want to flush the money down the drain. Again, these are low probability trades, but when they work out, they can work out big time. I'm going to show you some examples of stocks that have hit big time. I'm talking about like huge gains on them, out of the money, way out of the money option prices on them. Again, don't assume that you're going to make a lot of money every month, every week on them. If you do a few of these per year and you hit on some big ones, 5, 10,000%, that can really fund a lot of account growth. So I'm going to break down some charts, show you what to look for, and these are trades that when we see them set up, the potential for them to set up, we'll post them in the club. But again, don't put your life savings into them. These are again low probability trades. In fact, I think it was last year. It was either last year or a year before. There was, in the course of the first quarter of the year, there were three of them on buyouts that had huge gains. I'm talking about 25,000, 50,000% in just a few days' time. If I remember correctly, one was GMCR, Green Mountain Coffee Roasters, Solar City SCTY, and there was one other one. I think it was ADT, the uh, security alarm company, I believe. And they just had huge price spikes and way out of the option monies soared. Another good one last year, I think it was last year or a year before, was Stripe STRP. It was a telecommunications company, and the options went from 25 cents up to, I believe, 60 bucks. It was a lot. It was some ungodly amount over the course of a weekend on a buyout. The I need to dig up those numbers. In fact, when I get into the charting, I'll show you the numbers on those. They're just amazing. But so keep your eyes out for that. Again, the bottom line with this is that we want to be looking for hidden price tension. And it's one thing to be looking at the long-term cycles and long-term price squeezes, but you got to get down to the nitty-gritty on these. You have to have long-term cycles, sometimes intermediate cycles, and the short-term cycles all pointing at a squeeze, and that's when you have the biggest breakouts of this. Now, there are some traders who look for these kind of trades using Bollinger Bands. I just found that very unreliable. Using Bollinger Bands randomly, there's just so many false signals on it. But when you use price squeezes, especially cycle-based price squeezes, long-term cycles combined with, again, intermediate and short-term cycles, that's when you can get some pretty big breakouts. So best way for me to show you is just to show you. So I'll go ahead and break down some charts, and you'll understand what a WOTM trade is. Okay, here's a screen capture I took after the fact just to record the option pricing on this. This is a guy on Twitter, and he said $50 calls last sold for 25 cents on Friday will be about $42 on the open. That's a 16,700% gain, or 167 times your money. And I've got some screen captures of the chart. Again, this company got bought out, so I don't have the current charting because the chart's been removed from the platforms. But I did do screen captures at the time. Let me show you a few of these so you can kind of get an idea of what caused, well, besides the buyout, what technicals might have helped you spot this particular setup early. Let me pause this and pull this over. Okay, this one, had I been paying attention to it, probably could have spotted this in advance, but don't know what was going on at the time, but it didn't catch my attention. But there were good reasons for it to do so. It had huge BMI on the left-hand side of this. You recall from my other training, when you're looking for strong breakouts on the right-hand side of the pattern, you look for strong breakouts on the left-hand side, and you get inside the cup and you look for your cycles to play out. So this is basically a 1, 2. You got about a 3, cat 3 line there, and you got the spike up to here. Basically, this is a handle pullback off of the pivot TM5 cycle, about right there, and you have a TM1 pullback in the handle. So technicals were there. This is a 2 BMI setup just to get to that area up here, and so technically this should have been one I spotted. One of the good things about having a club, this might have been one that someone else would have brought to my attention. This has actually happened before our club reopened, so sure someone would have spotted it. Again, it was an excellent setup, but it went from $25 up to $225 on competitive bids for the buyout on that. Just huge. Again, 25 cents on the call options down here. Expiration on those particular ones was pretty close, so you still would have made a huge amount of money against 16,000, 167 times your money in. But if you were a little bit further out in the options, wow, that would have been tremendous. But that's the potential when you're using price squeezes. Again, Bollinger Bands, other forms of technical analysis, just not going to cut it for these types of price squeezes. Just again, the big picture here, again, huge momentum on the left-hand side. The BMI coming back to test that pivot was about 2 BMI. That's very strong. And pull back in the handle, about a TM1 cycle on that. Again, you have the price squeeze setting up. This pullback in the handle also respected that prior consolidation zone. It had support above that. And so you can see after it took off out of that hammer right there, just huge run up on that. And this is what can happen when you're focusing on the big picture. Again, should have caught it, didn't catch it. You're not going to catch all of them. It's just the way it is with this stuff. You get 8,400 stocks in the market, and the more eyes you have out there on these things, the more likely you are to catch them. And once our club gets really rolling, get a bunch more subscribers in there, we're going to have a lot more opportunities to catch these type of setups. So let me break down another one for you. Okay, this next one I'm going to show you just to demonstrate the power of WOTM trades. And again, this is not something we would even consider trading. It's not our type of trade. But to demonstrate what happens when you have a way out of the money option to come into play. And I'll give you the chart. I'll show you this chart. And then we'll get on to some more realistic ones based on our type of trading. But just so you can see how these option chains move when you get a way out of the money option kick in. Okay, pull this chart over here. So what happened was, this is Johnson & Johnson J&J, very high trading volume stock, very liquid options. So you're going to have excellent option pricing on this. Now, what happened was they had I guess a lawsuit either got filed. I think a lawsuit got filed because the Johnson & Johnson over the years, I guess, may have been hiding evidence that their talcum powder caused cancer, something to that effect. Check the news yourself on it. But there was just horrible news came out probably just it was either expiration Friday or a couple days before. So you had very close expiration and very far strike on it. So you can see on that bad news, prices just cratered. It went from, I mean, this is normally a very stable stock that does not move that much. I mean, this is a pretty good mover here, 130 to 142 in a few weeks. But, it's not your typical momentum stock. But when this fell right here, just went from 147.50 down to 127.50, $20 in just 2 days. Let's look at what happened to the options on this. So this was, here's the strikes on it, and you can see, like for instance, this right here, and these are pretty liquid options again. A lot of contracts out there on this. So for instance, this right here, the 133 strike, the gain on that particular day after the prices crashed down to 132. That wasn't even the bottom. Went up $2.39. So basically, the prior day, you could buy a contract for a penny. So for $1, you would control 100 shares. So $100, you would control 100 contracts. You'd have basically 100 times 100 shares, or 10,000. Let me just pause this, make sure I got my math. Yeah, that's correct. So for $100, that's all you have into the trade. You're controlling 10,000 shares. And just on this day, this time of the day, this is early in the day, 11:48 Eastern time. So you had your $2.40 on the money on 10,000 shares. So you had $24,000 potential on a $100 investment. So huge return, assuming you would know that was coming. Now, if you're following the news, you might have possibly, I don't even know if there was any suggestion that was a possibility, that there was anything percolating on that. It doesn't look like that based on the chart. It just basically came out of the blue. So you can look at that. Just the potential on this is huge. At $144 on the strike, it became increased from 5 cents to $14. So let's extrapolate the math there. So you would control 100 shares at $5, and so 20 times that, you control 20 contracts, 2,000 shares times $14, so $28,000 on your $100 investment in 1 day based on it. Again, this is not our type of setup. I'm just pointing this out to demonstrate the power of WOTM options. So let's go on to some charts that actually offer a much better chance for us to catch them in price squeezes. Okay, this one here is not your classic WOTM play, but you can see when you get even just a couple dollars out of the strike price. Let me show you the chart here. I believe the purchase price was around the $22 area, and just getting just a few dollars out of the money on a close expiration strike. See right here, the $26 strike, and it was a short expiration, just a couple weeks on that, and the option soared. Let me just show you here. Option soared. Let me see, from five. Let me see. Price was $1. They went to $13.30, so 1,300%. Just going a little bit out of the ways on your strike. So I'll show you some others again that had a way out of the money, but just being a few dollars out of the money with a close expiration. This one popped. I'm not sure if it was earnings or I believe it was earnings, but I'm not positive about that. But I actually didn't have the greatest exit on that. I had a few more days left on the options, but this weakness on the gap up day got out early, but left quite a bit of money on the table, probably good $10 on those. So it was quite a bit more, probably a 2,500% return had I stuck with it for a few more days. But that's the way it happens. You get shaken out of some pullbacks on occasion. Let me show you another WOTM trade here. Before I do that, let me just go ahead and break this chart down again. One BMI on the left-hand side again. Three cat lines. You got cat 1, cat 2, cat 3, and this is why it was a real good opportunity to get in. So you had key psychological price point right here, the $25 area, and it was banging its head on that and broke through pretty strongly. But again, slinky off a low, so we're always looking for these price squeezes, especially prior to potential news release. And this one popped really hard again, 1,300%. Hung on a few more days, would have probably been a good 2,500%. Let me show you another chart here. Okay, here's a look at one had a high level of predictability. This was TTD, the trade desk. This had a 2 BMI set up on the left-hand side of the pattern. Pull back into the cup. You had cat 1, cat 2, and cat 3 set up, and then you had two internal cat lines, and broke out of the second cat line inside of the slinky. Pull back off of cat 3. That's always where we're looking to get in. And you can see right here, perfect entry on the mid-channel violation, around $45. So popped out of there again. In order to get the big WOTM trades, what you need to be is real close to expiration and real far away from strike. So this particular trade, a $70 strike, which was huge out of the money, but again, you had very demonstrated momentum back here, and short cycles in the cup. This is a really strong cat line here, TM1 cycle, and some internal cycles in the price squeeze. You had the psychological price point right here, $50. Slinky setup. So the $70 strikes a few days before expiration. Let me pull that over here. Numbers on that. It's going to be a little bit hard to believe, but this is what is possible when you get way out of the strike on these particular setups where you have the huge breakouts pre-expiration, close expiration on it. So this is again on TTD. You can see here on, I did a screen capture on I believe it was Wednesday. The let me see what strike. $70 strike had gone from 450 to 455. Wait, let me back up on that. It had gone from 5 cents, so basically 450. It 5 cents it started. I'm sorry, I'm confusing myself here too. Started out at 5 cents. It changed $4.50. Went to 455 on that Wednesday, and so basically 5 cents would have bought you one contract for $5. So you would have controlled 2,000 shares for $100, and those were worth $4.55 on Wednesday. Or so again, 2,000 shares times $4.55. That's around $9,000. So $9,000 versus the $100 you got in. So 9,000 times your investment, and then let's go to Friday. Again, that was so it came into $12 in the money Friday. So $100 equals 35,000, or $500 equals 150,000. Can you see how this can make you a lot of money quickly? Again, there are some that don't offer a high level of predictability. Some of these do. If you have your eyes on it, that particular day, again, not always easy. It's 8,400 stocks in the market, so need a little bit of edge. Sometimes scans will get you there, and sometimes just having awareness how these price squeezes set up, the math on them is pretty basic once you understand how it works. And again, having a lot of eyes on them makes it a little bit easier to find these. So that's one of the reasons why reopening the club, because we want to have a lot more opportunities for these type of trades. Okay, I think you're probably getting the point. Again, these WOTM trades, they're not there's not a huge abundance of them, but earnings season, great time to be looking for these, looking for the price squeeze setups. And anytime you see some long-term cycles combining with the short-term cycles to create a price squeeze, there was another one I didn't show you, Buffalo Wild Wings. That particular stock had a actually really excellent price squeeze. I didn't notice it at the time, but in hindsight, obviously you find these quite often. But I think if we had a pool of people who had their eyes scouting for these based on the math that we'll provide, that's something that we'll be looking for in the club, a lot more of these. So again, can't build a service around it. There's just not a lot of these that offer the high level of predictability on these short-term expirations and far-away strike. But they're out there, and we'll be finding some in the future. So that about wraps it up. If you've enjoyed the video and you want to be notified when we post more of these videos on the channel, just hit subscribe and also the bell icon to be alerted immediately when we post a new video. Have a great day. Take care.